Well, thank you guys so much. Loving the new platform. It looks great. And thank you to everyone who's joined today. The presentation that we're here to share and give is a little bit unusual compared to what we normally present on. Typically, we'll talk about tax credits, incentives, state and local tax, R&D tax credit. But today is more about the industry as a whole, how it's changing. We have so many partners that have come to us, CPA partners, asking and sharing their concerns with us about where the industry is going, how it's changing, and how they can keep up. And that is the main goal of today. So the hope is that everyone will leave feeling like they have a really great plan in place to continue growing their businesses and make it even better. So hopefully many of you know me. I'm Maggie Crowley. I am head of strategic development at Leighton, and Mole is partnering with CPA firms to help grow their business. So today is the perfect type of presentation. So you'll actually be hearing a lot from me today. And then alongside me is my colleague Ram, who I think many of you also know. Ram.
Hey, everybody. Yep. So anybody I haven't met yet, my name's Ram. I'm a CPA over at Leighton. I've kind of dabbled in a few different products we offer, a little bit of R&D, but I focus mostly on cost segregation now. So I'm here to kind of lend my input from the perspective of another CPA and someone who kind of focuses in on a couple of niche areas, and how we typically like to help out people like you, like offer more in-depth services that you might not have at the moment, at least. Sorry, are you having trouble hearing me?
It says no voice.
I'm hearing you just fine, Ram. So I think we're okay.
Same. I can hear you perfectly.
Okay, we'll chug ahead here. So yeah, pleasure to meet everybody. Hopefully we can add a little bit of value here today.
All right. So the plan today is just to hopefully the actual content will be a little more exciting than the agenda, but I'll quickly breeze through what we're planning to go over. We want to understand the why behind outsourcing. I think the word outsourcing can mean a bunch of different things to everyone. So we'll clarify what that means to us, and then hopefully make it more appealing and less of a scary thing. I think it's the way much of the world is headed. So we just want to clarify that. And then we're going to discuss some of the actual impact outsourcing can have on a CPA firm's capabilities. And then we'll run through some relevant tax strategies that you can implement in your firm. And then we'll also give you examples. We'll give you examples throughout. I think that's the best way to learn, in my opinion, is to understand how others have implemented it or experienced it. So
yeah, I personally, rather than just kind of getting a bunch of facts spit at me, having examples will help me learn. I need to see it to kind of believe it, I guess. And so we're going to try to do that for you guys, so we're not just kind of talking at you the whole time. We can actually make it a little bit more interactive. All right, so I think we're up to our first polling question here. So first test of this new software, and from our perspective at least. So what is your biggest challenge, A, B, C, or D here? I'm curious to see what you guys think.
Our first poll is up and going. Just a reminder, the polls are part of the CPE process as well, even if you're not here for that. Certainly do appreciate you participating. Helps move things along. Lets us know that they're working. Gives us an idea of who is attending today's session and shape the content as we move throughout the presentation. Seeing responses flowing in here nicely. So I think we're in good shape. Get our final few responses into poll question number 1. Again, all you need to do is select an answer you feel is appropriate and click the submit button. And final few moments on the poll, just taking a look at the results. No clear-cut winner, but in the lead is answer B, keeping up to date with the latest tax code.
And all right, amazing. I guess just let us know when we should move on to the next.
Oh, yep, we are back to you.
Okay.
So, yeah, interesting response here. I think the winner was keeping up to date with the latest tax code. close second was staffing constraints, which not a huge surprise here. There's a lot to keep up with, especially the past few years. And then, staffing has been a giant issue, especially in the past year or two. So we'll actually be talking about both of those things here as we move forward. Not to jump too far ahead.
Don't spoil it.
All right. So CPA landscape is shifting.
Yeah. So we want to start by setting the stage for what we are hearing in the news, what we're hearing from our existing partners on how the landscape truly is shifting in the role of a CPA firm. I think COVID did play somewhat of a role in this shift. And then, also just advancements in technology and in life in general. But it's definitely not, the CPA of today is not what it was 10 years ago. So Ram, if you want to.
Sure. Yeah. So one of the biggest shifts I think we've all seen in the past few years, it's probably been ramping up over the past 10, 15 years, to be totally honest, but it's the shift from tax preparation to advisory and more of a consultative role. I think the role of CPAs in the past was largely but it was largely administrative, helping prepare tax returns, kind of doing the pencil pushing, so to speak. Whereas recently, more small businesses, just kind of the advent of the internet bubble and everything, there's just more availability. And business owners are looking for more advisory from their CPAs. So more so not just kind of after the fact, but asking for advice on how to run their businesses to kind of optimize how their taxes are being filed, how they're going to owe tax, how they can kind of structure their company to work more efficiently. Then there's also enhanced compliance and regulation expertise needed. So especially in the past 3, 4, 5 years since the Tax Cuts and Jobs Act, and then the CARES Act during COVID, there have been some pretty wide-reaching changes in the tax code that we've had to keep on top of. And then, with the CARES Act, some of those were kind of pulled back for a couple of years, and then they were brought forward. The past 3 years have been especially complicated with the shifting timelines and the shifting regulatory status, really. So keeping up with the compliance and regulation expertise has been a bigger focus for CPAs than it had been in the past. And then, like you guys mentioned, staffing shortages. Primary concern right now is the challenge of locating people that can do the job, that are trained well, that are interested in staying in the industry. So that's definitely one of the things that have been shifting recently. So how the modern CPA firm adapts, right? So the CPA firms have changed, along with the kind of requests from clients. Firms, how they actually function are changing from, the big four, right, all the way down to your kind of mom and pop CPA shop. First big change here is that technology is replacing a lot of the work that we do manually, right? So one of the big things I hear from CPAs that we partner up with when I deliver an R&D tax credit study or a cost segregation study, I ask if they have any questions, and usually the feedback is I'll plug it in and I'll let you know what the software says, So there's a lot of work that technology is kind of taking off our shoulders, and it's freeing up our time to focus more on that consultative role that we talked about.
So I think now is a good time for a lot of firms to reassess how they currently operate and the flow within their business, and think about bringing in some new technology to allow them to take some of the more administrative tasks. I like that phrase, Ram, the pencil pushing tasks. But take those tasks and you can automate them with technology and AI, and then you're able to actually have a more efficient workflow and workforce. So those people that may have been responsible for those type of tasks, you can now put in a task that would encompass more advisory. We shared a statistic on this slide that shares that about 23 to 31% of the total cost of departments can save just through better utilization and process efficiencies. So bringing in technology and outsourcing some of the more complex aspects of tax that are important to your clients, you don't necessarily need to do those in-house.
So kind of adding on to that, so the AICPA, basically they ran a poll and they showed that keeping up with changes in the complexity of tax law is what impacts most of us the most in our day-to-day. Like we mentioned, from the Tax Cuts and Jobs Act to the CARES Act, now to the Inflation Reduction Act, the tax code has shifted significantly. Keeping up to date with that, that's a full-time job, just kind of keeping up to date with what's even available, never mind how to actually go about taking advantage of it. The Inflation Reduction Act itself, it brought, dozens of new tax credits, new deductions. I myself sat down and just kind of worked through what was offered in the IRA and what was brought forward. And it really expanded kind of not just what CPAs are able to offer. It actually expanded what we can't, because it just started requiring more in-depth engineering input, especially for something like cost segregation, 45L, 179D. It's just not something a CPA can do on their own without that, external help.
I think one thing we find in the industry is that there is so much education available to the industry, and it's a matter of choosing who is it that you trust, that you want to get your education from, and how do you want to receive it? A webinar, an in-person event, self-paced learning. So having partners who can also supply you with that education can be extremely helpful to make sure you're getting the quality. And again, there are just some codes or tax regulations that perhaps you don't need to be an expert in, but you can rely on the extensions of your firm that you choose to trust to be the expert in that. Not everybody can be an expert in everything.
I don't know. I think I'm pretty close myself, but other people might disagree. So in the poll, I think one thing we're seeing recently, and what you guys all agreed to in the poll in question, was that staffing shortages have been a real issue recently. The accounting industry is changing. Education in accounting is changing. Kind of what people are looking for in a career are changing. So according to the Bureau of Labor Statistics, in 2021, there was 1.3 million accountants and auditors in the industry. Since 2022, so just in the past year, maybe a little over 300,000 accountants and auditors have left the industry. So that's 24% of the industry just gone overnight, essentially, in 1 year. College grads just aren't pursuing accounting and auditing as a career as they used to. So finding people to become experts in niche areas is harder to do. It's harder to do just because there's fewer people there. So you need people that are like you, that can really focus in on the clients. Hiring people specifically that can handle 10, 15, 20% of your clients, as opposed to the entirety of your client base, it's harder to justify now with the shortage that's out there.
Yeah, this definitely is a huge issue. I went to the AICPA Engage earlier, and there were several sessions about staffing shortages and what people can do as an industry to get college students interested in pursuing this as a career. So I think it's probably a good thing. People are talking about it. People are aware it's a problem. It means that there will be some sort of fix soon. But 24% of an industry to just up and leave is I wrote whopping for a reason. That's a whopping number. So like a change and a shift has to happen. Otherwise people won't be able to keep up. And I know we didn't really mention in this, but burnout for people who are picking up the slack is also a massive consideration that many employers are concerned about as well. So again, it just highlights the point that instead of trying to do it all in-house, you can outsource certain aspects of the business. One theme that I've seen a lot in conversation, webinars, news, and even businesses popping up are offshoring. So there are a few different companies now that will offer, I think sometimes it's temporary staff that are located outside of the United States at a less expensive rate, and they will do both the like pencil pushing type of tasks, but also some of the more involved tax work. So it's also, definitely a great model to consider. We have some offshoring that we do in our office out of Casablanca, and it's been a really successful model for us.
Yeah, and some of the people in Casablanca are the smartest people I've ever worked with too. So offshoring, it's becoming more available, and it's just becoming more effective also as we start getting more capable. We're especially after shifting to working from home, working remotely, virtually, it's just becoming more seamless because that's kind of the standard now. So outsourcing is just easier, and it's just a better product than it used to be.
And I know some of you might think that sounds unattainable for a small, medium-sized CPA firm. There are a lot of businesses out there right now who you can work with, who already have that infrastructure set up. You would just have to pay them some sort of fee, and then you can take advantage of the tax team that they have out there. I think, like, for a firm like Leighton that's larger, or Big Four, we have the ability to obviously hire and create a business out there. That's not going to be realistic for every firm, but there are plenty of firms out there that have that set up for you. You can work with.
Yeah. So kind of shifting gears here to handling an audit and providing audit defense. So anytime you're talking about kind of a more niche area, whether it's R&D or 179D, 45L, or even just SALT consulting or grants incentives, audits are almost always one of the first questions we get. How are audits handled? How do we know that when you deliver, it's going to be supported? It won't just get knocked down an audit. From a CPA firm perspective, audits on niche areas, frankly, they take up a lot of your time, and then it applies to maybe 10, 15, 20% of your client base. It's important to make sure that you have the experts in that niche area contributing to audit defense in those niche areas, right? If you're filing for those kinds of credits and incentives. Outsourcing allows you to kind of push that burden onto whoever that outsourced firm is. For us, for example, we provide audit support at Leighton for all of our products, right? That means that the people that are speaking with your clients, that are working through the credit, the calculation, the cost segregation study, they're the ones that are also preparing the initial documentation request when the IRS comes knocking. They're the ones that are stepping in front of the IRS and defending. So audit defense being built in, it gives you peace of mind, meaning because you won't have to defend it yourself. You won't have to kind of step back into, we'll say reconstruct whatever the outsourced firm did for you. It also kind of saves time for your firm, your employees. Anything you want to add there, Maggie?
I think just choosing. No one likes an audit. Audits are a massive pain, and I think they're going to be we're going to see more and more increasing. ERC just, I sort of got a little bit out of control, right? And we are going to see, there were so many firms that popped up that were probably not correctly doing ERC. So I'm sure there are many of your clients who maybe did it with a third-party firm that are going to end up falling victim to an audit as a result. I think the IRS is also in a position where they want to be pretty prudent about collecting cash where they see it. We've definitely seen a rise in state audits. So having a plan in place for when your client gets an audit, not only is going to be great for the client, but it's also going to be great for you. Audits are so time consuming. So working with a firm or having a third-party partner who can support you through that is really going to be advantageous. Yeah,
ERC is a great point. We've all seen the ERC shut down. The audits on those are going to be crazy. So that takes us to our second poll question. Do you act as an advisor to your clients or as a tax filer? A or B? Nice and easy one.
Very easy.
So that second poll is up and going. And just a reminder, polls are part of the credit process. if you're on your mobile device, should be able to see it. Just scroll on down and see that submit button. If you're in full screen mode on computer, you need to exit out to see the poll. And then once you hit submit, you'll come right back into the session. That's all that needs to happen. So seeing responses coming in here, nearly everybody already having an answer into polling question number 2. We'll just give it a few final moments for those getting their responses in.
So it looks like most are acting as advisors, which is great. Hopefully this will give you some additional tools to put in your belt. That's a little foreshadowing for what's to come in this presentation.
All right, we'll go ahead and close down the poll. And Maggie, back to you.
All right, thank you. Thanks for answering these polls, guys. So now we want to just run through some of the benefits of outsourcing for your client base. I mean, everyone on this webinar, whether you own a business that requires a CPA or you are a CPA, we're all business people. And the client is what keeps your business ticking. So we want you guys to hopefully understand what it is that the benefit to the client.
Yeah, so I think outsourcing kind of allows you to fill out your tool belt a bit, right? So you guys as CPAs, as advisors for your clients, you guys know your clients intimately. You guys know the ins and outs of what different entities they own, how tax credits and deductions are flowing through down to the partners, how, they all interact if they have consolidated groups. You understand your clients at a detail that an outsourced firm just doesn't. Conversely, an outsourced firm understands their niche area because they spend 40 hours a week just doing the research on that, keeping on top of it. I spend basically my whole morning catching up on some changes because of the IRA. Yeah, so you're just reading that niche area, and that's all you do all day. By working with tax specialists, you get to kind of keep that tailored service that your clients want, that advisor that they want your input on how to run their business efficiently, while also getting these niche areas without having to bring somebody in, having to hire somebody that has years of experience. If there even is somebody out there left, 24 people, 24% of all the people in accounting gone. If there's anybody even left out there to hire, they're going to be expensive. So tax specialists should just be another tool in your belt, right? You use Excel, I'm sure, right? I love Excel. I don't know how you do without it. So if you don't, kudos, because you you have some kind of superpower that I don't have. You have your QuickBooks or whatever, whatever software you're using. Just like those other tools, you should have specialists that you can turn to when your clients have questions about how they can take advantage of these credits and incentives. So tax specialists, they aren't holistic, right? They don't understand the complex financial landscape that your clients are in, right? But you do. So being able to kind of pair those together, you get to keep that holistic view for your clients and kind of, take that nurturing approach with your clients while bringing in those niche areas, those credits and incentives or, grant study SALT, whatever. You get to bring in expertise from people who only focus on that, and kind of pairing them together allows your clients to have that guidance, allows you to have that advisory kind of role.
And money.
Cash money.
Clients could be missing out on cash money if they're not taking advantage of the right credits, and if they don't have the right strategy in place. We'll talk about this a little bit later, but state and local tax advisory has become a really large part of what we're doing as a firm, and it is so complex. There are so many rules, but there's also a lot of money to be missed, like just basic overpayments that are happening, that a client really shouldn't be overpaying if they don't have to be. Also, I think being able to offer an advisory service that is going to impact the client's bottom line in a positive way is going to make for a client that's going to stay with you for long term. I think the perception of a business owner to their CPA firm is that their CPA firm just knows how to handle it all. Like, oh, that's my CPA. CPA, there's actually like a lot of power that a CPA has in dictating the decisions that a business owner makes. So you want to obviously be able to provide the best and most well-educated answer and strategy for the client and keep them long term. We hear it from both sides in our role. We obviously hear the success stories with our partners, but then we also have clients of ours that are seeking a new CPA, and often the reason is, because that CPA didn't present them with this credit, that credit, and they didn't understand how, like, the bigger picture of what they should be offering. So don't let them miss out on money.
Happens all the time. I'm a CPA, but I'm not a practicing CPA, right? I am, but I work on R&D tax credits, cost segs, very specific areas. Constantly, my family's coming to me, hey, I'm thinking about doing a 1031 exchange. Can you look at my books? No, not really. It's not my area. Because I'm a CPA doesn't mean I know how to do absolutely everything in the tax code. So it helps having people to turn to, knowing people who do know those areas of 1031 exchange. So I can actually ask them how it should be handled, and then tell my family so that they keep thinking I do know everything.
I don't know if that perception is ever going to change. That, like, one of our tax attorneys gets that as well. He's a tax attorney, but he always jokes that, like, everyone comes to him. They're like, hey, I got a speeding ticket. Can you help me out? You're a lawyer, right? And he's like, no, it's totally different. But unless you're in the business, I don't think they get it.
Yep. So how do you determine who to outsource your work to? So this is pretty important, right? So there's a lot of people that are offering services, and you need to figure out who you want to go to. Perfectly evident with the ERC issues that Maggie brought up earlier. They shut down ERC because of how many people were offering employee retention credit services that maybe they shouldn't have been, or people are, trusting people that they maybe shouldn't have been. So we're going to talk through a few things that we see, just kind of from being on the other side, what we typically like to advise our clients to do, or we hope that they're doing, and it kind of guides them to us. But the moral of the story here when you're outsourcing is, go shopping, do your research, find something that works for you. You need specialists that are going to make your job easier and more valuable, right? So you want to find something that's going to work in your workflow, keep yours and your clients' processes running smoothly. You want specialist products that align with your clients' needs. So finding a one-stop shop can be pretty valuable, right? So if you have 10 different people calling your client for 10 different credits and incentives, it's going to inevitably cause a logjam for your client. That's not what you want to do. You want to make sure you're making their day easier. You want to make sure you're making your day easier. So finding a firm that kind of handles more than one thing, or at least, works in a way that works for you is a huge boon for you. And then you want to ask for testimonials and references. So I think, Maggie, this is kind of your area here, right?
Yeah. I mean, it's like with any other like major decision that you make. Let's say you're getting worked on your home. You're probably going to get 3 different quotes. This is a similar process. You don't necessarily have to go with the first person that you chat to a few different folks and see what they have to offer, and hear from the clients that they're working with. We're actually going through a process right now, looking into some associations to join. And I always make it a point to talk to a member and then talk to a vendor to see how they're treated and if it's actually valuable, because it's a tough decision, and like tough to wrap your head around outsourcing something and like sending your client off to another business. You've got to feel comfortable, trusted, or that you can trust the firm you're sending them to. It's kind of like sending your kid to daycare, right? You're not just gonna do that haphazardly. You put some investment into that decision. So this is similar, not the same, but similar. And then finding a firm that can meet your basic needs, but also go beyond that, and a firm you can truly partner with. I think it's really important to have a single point of contact, that no matter if you've got like 100 clients that you've sent over to this firm to work with, you got one person that you can get in touch with, who can, you know, be your liaison within that business. And then also a firm that you're proud to partner with, and that you know will enhance your business. That's the whole point in essentially like merging and marrying these two, your firm and another third party firm. And then there are some benefits that maybe you haven't even thought of. There's revenue share opportunities that some firms offer. This is, I wish we had done this as a polling question. I find this to be 50-50. Some firms are not interested in taking a revenue share. They don't see it as something that's ethical. And then other firms are perfectly happy to. They understand the business sense behind it. So it can certainly help your business grow from a monetary perspective, and then also help your business grow from a client perspective. And then there are firms that'll offer marketing opportunities. So most CPA firms, if you're, you know, hard pressed for staff, you're probably not going to apply that staff to marketing efforts, but marketing is pretty important. So working with a firm that can help you build out materials, attend events, promote your brand, build your brand, is really important to have. And then, of course, thought leadership. We've all got a lot to say, and to have a platform to say it on is really helpful, adds validity to your brand. And you shouldn't keep it a secret if you got something good to say. And then, of course, mutual referrals. So as I alluded to before, we frequently do get requests for new CPAs from our clients. And it's always nice to be able to supply them with someone. Typically, people prefer someone local to where their business headquarters is. So just being able to have a trusted group of CPA firms to send business to and also get business from makes for a beautiful relationship.
Yeah, happens all the time. We have a lot of clients that, you know, like Maggie kind of mentioned, they either their CPA wasn't aware of some kind of credit, or they didn't know how to apply it, and so they ended up losing out on it. Or, you know, there's just some kind of problem that they didn't feel like the CPA was kind of meeting all their needs. Those mutual referrals makes it possible for us to kind of guide clients towards CPAs that are going to have that more advisory role, like you guys said you want to take. And then also the opposite direction, you guys who want to take that advisory role, you know, it opens us up to have an open source of communication, open line of communication, make sure that information is getting to clients and then back to you and then back to us, so that we can make sure that they're taken care of.
Earlier this year, we were, or actually, I guess it was last year, at the height of ERC, there were so many firms that weren't willing to file a 941X for their client. So we ended up selecting one of our existing CPA partners to be our sole provider for 941X filing, which has been a really nice opportunity for the partner to make a pretty significant amount of revenue from that. And it's also been a nice way for them to you know, pitch getting some new clients. Although that's not necessarily their goal, but it just inevitably happens. So there's always, you know, we like to stay in our lane with what we're good at and what we understand and what our expertise is in. So there are so many different ways that we like to partner and that we can partner with our partners. I didn't want to use that word again, but
I was going to say, slip one more in there for the Grand Slam. Okay, so I think that takes us to our third poll question. We're making up for the 2 answer one last time. We're making it 1, 2, 3, 4, 5, 6 answers, 6 options on this one. So the following services, which do you outsource or are you interested in outsourcing?
And there's only one more. I think some people are having issues with the polling questions. So I guess just how it goes with new technology, but there's one more after this.
That's right. This is 3 of 4. Up and going, seeing responses coming in here nicely. We're close to having all responses for these polls. So a few exceptions here. If you do have some technical issues, unsure, please reach out to us here at CPA Academy. We're happy to address any CPE concerns.
I love watching the answers flow in.
I know with legal gambling now, we should have put some bets down on what's going to win. It means a horse track when you have CPE poll questions.
All right, final few seconds here on polling question number 3, and we're back to you.
All right.
All right, so we'll run through these. Employee retention credit. Oh, sorry. The results just. I think the highest one was employee retention credit. That's the number one service that people want to outsource, and then the second one was R&D. The lowest one was energy efficiency. I have a feeling that's because a lot of people don't necessarily know what goes into energy efficiency and who's available or who's eligible for it. So, what a timely discussion. That's the next part of the webinar.
The record, cost segregation was third. Not too bad. Out of 6, we'll take it.
Quick. So we're going to run through some of the products that we offer at Layton and just quick high-level overview of what they are, and then an example of what they can actually mean to a client and the impact that they can have on their business. And then we'll try to leave 5 minutes for questions. So please type your questions in there if you have them, and we'll get them answered. So first one is employee retention tax credit. I think most of us are aware of what that is. There have been a lot of different changes as of recent to ERC. That's obviously on hold right now. And I think just to clarify what that hold means is there's a pause on accepting any new submissions, and then they'll be, I think, is it after the holiday season in January, they're restarting actually processing the claims? I
think so. Yeah.
Okay.
Yeah.
And I think it was 2 weeks ago or last week, they issued the notice saying that they were giving people the opportunity to pull their submission. So I think that's pretty telling that the IRS is thinking there are a lot of claims out there that did get out of hand and that are not accurate. So I think that's definitely the right thing to do. But I mean, there's so many indicators that this is going to be heavily audited. We really got to make sure people are prepared. So we've actually just we've expanded our offering, and we're now going to be, whether we did the study or not for the ERC credit, we're offering audit support on that. So if people are concerned, or if they're subject to an audit, we're happy to help there and support that. And then there's no doubt that ERC is definitely valuable, and it can really, if eligible, it can make a massive impact on a business's bottom line. In this example, there were 108 employees in 2021. We claimed for the first 2 quarters in 2021. They had a small PPP loan, which makes them a better candidate for the ERC. And they had a significant decline in gross receipts, which qualified them. That was their eligibility for ERC, and they were able to get back $1.1 million.
Yeah, so a little bit of detail, the PPP loan, you can't double dip ERC and PPPs essentially. So if employees were paid with PPP loans, we have to back them out of the ERC calculation. So that's why that small PPP loan compared to payroll wages was a good thing. And, this is one of those rare instances where low gross receipts actually paid it off for them. So they got 1.1 million back to kind of pay them back for keeping people on payroll during tough times. So another product we offer is the research and development tax credit. We mentioned it a few times. Our firm actually was kind of started on R&D and then expanded from there. So it's a little bit of our bread and butter. But the R&D tax credit is a federal incentive to essentially pay you back for investing in developing new products or processes. So you can amend to claim the R&D tax credit. So you can do it for this year and look back 3 years, depending on when you actually filed that return. And it essentially ends up being 7 to 10% back on wages, any kind of supplies, any kind of 1099 contractors that were involved in research and development in any kind of product or process that was new to that company. So research and development tax credits are one of those things that I think a lot of CPAs have heard of. A lot of business owners have not heard of it. But it's a lot more broad than people expect. You see research and development, and I personally picture lab coats and beakers, and I'm picturing like an old Einstein, from cartoons or something. But research and development tax credit really applies to any product or process that's new to a company. It doesn't need to be a brand new invention. You don't need to be, inventing the next Facebook or anything like that. It can really apply and help companies reduce their tax liability for developing something new to them. And so it's worked really well. It's been around since the 80s. They made it permanent in 2015. So I started my career kind of focusing in on research and development tax credits, not really knowing if it was still going to be a thing a year later. In 2017, it was made permanent. And then in 2017, got a little bit of job security there, which was nice. And then it worked really well. So states made their own R&D tax credit versions, right? So every state's a little bit different. Some states don't offer it, but most at this point do. Most will kind of mimic the federal R&D tax credit. Good news there is that you can do the federal research development tax credit, and usually it'll just apply to that at the state level because it has the same requirements. It applies against the same type of expenses. So you can kind of just roll that same study down to the state level, and you can kind of double dip. Of course, some states like California, it starts at the federal net income. So you really want to make sure you're taking a look at that interaction, make sure you're taking full advantage and you're not kind of doing too many add backs. Maggie, is there anything you want to add there before we flip to the example?
I think R&D is a really good example of something you want to outsource. It's a true tax strategy for a firm that's eligible for it. This is something they can claim year over year. So to make sure that they're tracking the accurate information that qualifies them is important. And with some industries, it's pretty straightforward. Software, relatively straightforward. That's an industry that does track projects like that anyways. But if you get into industries like manufacturing, like winery, brewery, the ones that are it's a bit more surprising that they qualify for the R&D tax credit. That's where you really want to have a specialist. And also I think, having someone who's going to support anything through audit or take a proactive approach to audit is super important when claiming credits like this. But, as the theme of what we're sharing today is shifting from a CPA firm to a CPA advisory, this is how you become an advisor, by offering tax strategies to your clients.
Yeah. It's like going on the offense instead of on the defense. Get the research and development tax credit in front of them before they know they need it. Makes you know what you're talking about.
Exactly.
Yeah. So this example was a biotech medical device company. So a little bit more obvious than a brewery or winery or manufacturing company that gets the credit for improving their process. But this is a biotech company. The study was turned around in less than a month, so it doesn't take too long, especially when you take especially when we're working with CPAs like you, where we're able to get information quickly, we're able to get information that is reliable, and we can work with you to communicate with the client. It makes turnaround time a lot quicker and a lot smoother, rather than just kind of working directly with that company. So this company had 45 technical employees, so decent size. And wages expense was around $3.5 million of qualified wages for 1 year. So what that means is that for the DNA sequencing they were doing, the biosensor development, CMOS chip development, all that stuff that none of us as CPAs understand really. $3.5 million in wages was spent developing those technologies, either as a direct developer or as a direct supporter or a direct supervisor. Basically, people involved in that development. $3.5 million of those wages went into the calculation. In this case, the study returned $655,000 in R&D, and that's a tax credit, not a tax deduction. So a lot of the things we talk about are deductions, but R&D is a credit, so it has a lot more value, and clients kind of understand how it helps them a little bit easier than if it's a deduction. You don't have to step them through taxable income and their tax rate and all that. So the beauty of a tax credit is it makes sense to everybody. Anything that you got to add there, Maggie?
No, I think you're right. Tax credit makes sense to everybody. I think everybody wants tax credit.
All right, energy efficiency incentives, 179D and 45L. These are a great example of one of the products that you want to be outsourcing. 179D and 45L. So 179D is for commercial buildings, 45L is for residential buildings. But both are, 179D is a deduction and 45L is a credit. They're both tax incentives aimed at encouraging energy efficient buildings, right? So the government's trying to go green. This is how they're doing it. The beauty of 179D and 45L is they're both based on standards from 2006, 2007 area. I'm not an engineer, so I'm not going to claim that I know that. That's why you want to outsource this, because you don't want to rely on someone like me who isn't an expert. But 179D and 45L does require professional engineers, HERS raters, people that are trained in engineering to go on site to inspect the facility, to inspect the equipment that you're going to qualify. It's also easier to hit than most people expect because it is around a 2006 average. You're comparing a building that was built in the past couple of years to something that was built in 2006. It's going to be more energy efficient. So one of the things we hear a lot from people is, hey, we're not building specifically for energy efficiency. We're not building for a LEED certification. The good news is that the way you build now is just so much more efficient that a lot of companies are going to qualify, even though they're not purposefully trying to hit these requirements. Outsourcing this is essentially required. So I think for 179D specifically, it's required to be inspected by a third party. So that means a professional engineer. That's like, the engineer's version of CPA, right? They have to take that 8-hour exam or whatever it is. They actually have to physically go on site and take a look at that building, make sure that it qualifies, and then they'll qualify for the $1.88 in the past or $5 moving forward, or whatever it is. So these are perfect examples of credits and deductions that need to be outsourced to be taken advantage of, but something that you can put in front of your clients and get some depreciation, accelerated depreciation from their buildings that they otherwise wouldn't even know about, likely because they're kind of hidden in the IRA.
And if you guys are thinking about who in your portfolio would be a good fit for this, typically it's building owners that are going to benefit from this. So if you have someone that owns a commercial building, they should absolutely take advantage of 179D for work for a new building, new build, or for any improvements they've made to an existing property that they own. Like Ron was saying, it doesn't take much to qualify. It could be new lighting they put in, new HVAC system that they put in, new like exterior windows, anything to the envelope of the building. It doesn't have to be like, wild stuff that they're doing, or sustainable efforts. It doesn't have to be a garden is powering the whole building. It's just like basic improvements that most people are making anyways. You shouldn't overlook the fact that there very well may be a tax credit available to this one is a tax deduction for commercial available to your client. And then same with 45L, except that is for multifamily housing. Think like condos or apartment complexes, and that's on a per unit basis.
So let's take a look at a couple of examples. We have one for 45L and 179D specifically. So 179D, like Maggie just said, is a commercial building, and the deduction is on a square foot basis. So this was a high school, 279,000 square feet placed in service in 2020. So we were able to qualify the entire building. So I don't know about you guys, but the high school I go to wasn't really built for energy efficiency. It was not, the most advanced building in the world. So if you're qualifying high schools, you're probably going to qualify office buildings that are being built, or you're qualifying manufacturing facilities that are being built, or whatever that your clients own. In this case, they qualify for $1.80 based on the place in service of 2020 for a total tax deduction of $502,000. So it's a pretty big deduction that, if this wasn't placed in front of them, they likely wouldn't have heard of it. So it's one of those benefits of outsourcing. And then 45L. So like we mentioned, this is for residential rental property. So 45L, instead of being by square foot, it's by unit. So this was a 2-story, 53-unit rental property placed in service in 2021. 53 units were able to be qualified, so all 53. And they can be on a unit by unit basis. So if some were placed in service in a prior year, if some were rented in the year after, you can do it on a unit by unit basis. So it doesn't have to be like that perfect scenario. In this case, they got a tax credit of $106,000. So again, it's a credit. So when you tell your clients, we've got you 106 and it actually is $106,000, you're a superhero. So 45L, it's a great, tax credit to put in front of your clients. And then my bread and butter, my baby, cost segregation. So if anybody isn't aware of cost segregation, it's been around for quite a while. It's been approved by the IRS for quite a while. There's on a techniques guide out there that you can all read. It's been used and tested in courts pretty extensively. So it's one of those things that is relatively safe, and it's a really great value for clients because it has been commodified a bit. It's not brand new. There's a lot of people that offer it. So it can get a lot of depreciation deductions back to your clients for not a big price tag. So anybody who isn't aware of what cost segregation is, essentially it's the process of using an engineering process to pull components out of a building asset class and dropping them into accelerated 5, 7, 15-year asset classes. So you can accelerate those class lives, but also so you can start taking bonus on portions of that building rather than waiting 39 years. So because buildings are some of the biggest assets companies typically own, even just a portion of those assets being pulled out generates a pretty huge deduction. So it's one of those processes that is well established, well defended, and your clients can pretty safely take the cost seg additional deductions there. So in this case, we had a property that was worth $3.7 million. The basis was $3.7 million. So left in that 39-year class life, they would have gotten about $91,000 in deductions every year for 40 years, which, great, but it could be better. So they hired us to do a cost segregation study. And we were able to pull enough assets out to increase those deductions to $1.28 million. So increase from $91,000 to $1.28 million, which, because it's a deduction after tax, their cash savings was $405,000. So from a $3.7 million building, they got $405,000 in after tax cash savings in that first year because of bonus depreciation. They were pretty happy. They can invest in more buildings. They can invest in more employees. They can start paying their CPAs more money, maybe. They can start using that cash and, make it work for them, rather than waiting 40 years, to get that cash. So essentially it's just depreciation, but it's an engineering approach to pull as much as possible out of that building.
I like the sounds of that. Pay your CPAs more money. So I know I had said we would give more detail about state and local tax, and now is the time. So we covered, when we think about state and local tax, a lot of people are like, oh, are you guys like Avalara? And no, not exactly. We don't have, it's not a software that we're using. We're able to provide state and local tax strategy, understand where people may have a liability, or typically it all starts with a nexus study, and understand where businesses need to file a VDA and essentially like clean up their books is what we would start with. We're finding that, as we were saying earlier, a lot of the states are doing audits they're looking to collect money from folks. So if you've been selling into a particular state for the past 10 years or something, or not you, but your clients have been selling into a state for 10 years and they're looking to sell their business, and maybe they're valuing themselves at $1 million, but after they go and figure out the outstanding liabilities they have in several different states because they've never filed an exemption certificate or paid tax to the state, that valuation may decrease, to $500,000. So it's really important for them to understand and for them to abide by the rules. And that is exactly what we can help provide people with a strategy. We can help fix errors that may have been in place, and get folks in a good position. Another product that we offer we call them Refund Reviews. They might also be known as reverse state and local tax audits. But essentially what we do is analyze the areas of overpayment that most businesses are not aware of. I think there are like 735 different state and local laws when it comes to various aspects of tax. So that's extremely hard to keep up with. There's absolutely room for error, and we can help people identify where they've overpaid. Rome, I don't know if you want to expand. Oh shoot, we're out of time.
Just for the sake of time, I'm going to launch this final poll just so it's up and going. And obviously, once you get your poll response in, you can come back to see the slide. So Maggie, feel free to keep presenting as poll number 4. Our final poll is up and going.
And this is the easiest poll out of all of them. Pretty much, why'd you join today? So with this case study, the revenue, it was a medical software company. Revenue is $20 million, and the reason they were interested in working with us was because they had a change of key accounting personnel, and they were preparing for acquisition. So what we ended up understanding was that there were 24 states in which they needed a nexus study. We identified 23 VDAs needed, and this is a compliance product, so unfortunately we're not getting the money back. This is more money that we charged, but this is such a key exercise to go through when you are preparing for acquisition. Like I was saying before, you don't want this to diminish what you're valued at. And I know we're at time. So we've dropped a link in the chat or the Q&A section. If you guys want to book a meeting with us, we can expand on anything we've discussed here today. We'll also send you a follow-up email to answer every single question that was asked. I'm sorry we didn't have time to go through it. But the final product that we wanted to discuss was grants and incentives. And this is essentially, there are so many grants available in the United States. It's really confusing to think about where to begin. So we have a service that does that for you. And we handle it from the start to the finish. So identify the grant, do the grant writing, and then take clients to the submission stage.
So that was our poll question, which we already took care of here. So I think, we got through everything we wanted to talk about. We took you right up to the 1 hour mark, pretty much on the dot here. So like Maggie said, we'll follow up in email and try to answer as many questions as we possibly can. Appreciate you guys taking the time to listen, answer the poll questions. Hopefully we provide some value here. It looks like just based on the questions, there was a few deductions, credits, incentives that we talked about that you might not have thought of in the past. So I'm happy to see that we provide some value and kind of opened up a new opportunity for you and your clients to kind of take a different approach.
Well, thank you, everybody.
Well, Ron, Maggie, thank you both so much. Really do appreciate it. Obviously, contact information up on the slide now. If there's some additional questions you had that didn't get a chance to answer or ask through the panel, we'll get those passed along to our presenters once we wrap up. And of course, you'll see a notification from us here at CPA Academy, letting you know when your credit is all set and available in your CPA Academy account. So once again, Maggie, Rom, thank you both so much, and looking forward to having you back with us very soon.
Thanks, guys.
Thank
Have
you.
a great day.